Hey everyone, welcome in to another daily editorial here on the KE Report. We're excited for this daily editorial as we are getting an update from Ryan King, Senior Vice President, Corporate Development and Investor Relations over at Calibre Mining, traded on the TSX under the symbol CXB and on the OTCQX under the symbol CXBMF. Now, Ryan, we're going to talk about this business combination or merger with Marathon Gold, announced November 13th. Look, we have a number of questions for you that have come in. We've also talked to a number of newsletter writers and analysts about this deal, but we wanted to hear from you a big picture overview of what attracted the company to Marathon Gold and its Valentine Gold Project in Newfoundland, as well as some of the maybe changes in terms of focus that the company needs to have to get that project through the finish line. So overall, this is an all-share deal. When it was announced, the gross transaction equity value consideration was about $345 million Canadian on a fully diluted basis. Ryan, first and foremost, I'll give you an easy one. What attracted you to this Valentine Gold project?
Corey, Shad, thanks again for having us back. It's always a pleasure to be here, and it's a really exciting time. You've covered a lot of ground in your intro there. Thank you. It's been a busy week, and obviously due to the large announcement we made with the combination of Marathon Gold. And so as we've said for a couple of years now on the show, it's that Calibre's been continuously looking at organic and inorganic ways to diversify and grow into a mid-tier gold producer. And we've looked at a number of options to do that. And fortunately, we've got a gentleman that works in the business, Tom Gallo, who was a research analyst covering a lot of different names with Canaccord Genuity. And this was one that he covered. So we had a really good base of knowledge here on this asset. And Tom's always liked the potential, liked the opportunity. And what attracted us to this, really plain and simply, was a win-win for both parties. It was a need on their part with the funding gap and looking at options for their funding gap. And it was an opportunity for Calibre with a 50% build through 50% of the build of Valentine Lake that they've completed, and an opportunity for Calibre to fulfill that need with the cash and the ongoing operating cash flow to then have a pro forma company that's got over 60% of its mining NAV in Canada and the United States. So tremendous opportunity to diversify the overall portfolio. And really then, again, as mentioned, we are at a 500,000 ounce a year based on analyst consensus numbers gold producer once the Valentine Lake is up and running, which is anticipated, according to Marathon's numbers, the first half of 2025. So this is what attracted us to the opportunity, is an opportunity to fulfill that need, a win-win for both parties. And then there's a number of ways which, on the back of that the overall pro forma company could re-rate based on all metrics that we've looked at. Very creative for the business.
Well, Ryan, let's dive into that potential re-rating when you do combine with Marathon, providing the deal goes through. The 500,000 ounce a year mark would be a pretty big threshold, and that would take you into the mid-tier category. But a lot of people have made a bigger deal about the jurisdiction diversification versus just the production profile increase. How much of the decision was to just grow the production, and how much of it was really to diversify the jurisdiction?
Well, it's a combination, really, because 60% of the NAV will be in North America now, which, as we've seen by some of our peers, gets top quartile premium valuation. For example, at the 500,000 ounce production range, at the top end of the peer list is Alamos at a US $5 billion market cap. And pro forma, upon close, Calibre will come out of the gate somewhere around a $650, $700 million US market capitalization. Yeah, we've got work to do to get to that full analyst consensus production number, closer to that. So we've got work to do through 2024 and 2025. But this is the opportunity here. It's the production, because at the mid-tier level, analyst consensus numbers range, but 0.75 is about the average PNAV valuation, okay? Versus a junior gold producer, that 200,000 ounce range trades between, like a 0.4 and a 0.6. So by combining these, we see a re-rate on the size. By combining these, we also see a re-rate on the diversification and the 60% NAV being in North America. And again, Valentine Lake is a fantastic project, low cost, long life, open pit operation, with 50% of the construction complete. And the main key components of the construction that they've completed are the earthworks, the civil works, tailings management facility, the earthworks, the footings, foundation for the process plant. So, a significant amount of work has been done through this period. And therefore, we think it's a very attractive opportunity for all shareholders for us to partner with.
So let's talk about the cost to get this across the finish line, the Valentine Gold Project. As you mentioned, Marathon was saying that project over 50% complete, a lot of the key components done. But when you look at the cost standpoint, and that's what a lot of questions came in on, is that they had spent, as of the end of September, about $190 million Canadian. Estimated that it was still going to be almost $320 million to complete, but a lot of people were saying that there were some cost overruns. It's going to cost more. So it's that cash component over that next year to get this thing built. What can you tell us about how Calibre can continue to fund this build while also doing all the other work, the production and exploration in Nicaragua?
Yeah, and that's why this is a win-win situation, because we do have the cash. As you know, at the end of September, Calibre has US almost $100 million in cash. By the end of this year, we would anticipate another strong free cash flow quarter in Q4, plus a very clean balance sheet, right? Calibre has essentially no debt on the balance sheet. We're generating strong operating and free cash flow at these gold prices. So 2024 is expected to be another robust year for us. And we're very comfortable to fulfill all of the CapEx requirements to complete the Valentine Lake project. At the same time, again, we haven't provided guidance on 2024, but at the same time, reinvest in exploration, mine development in Central America, in Nevada, as well as very likely look at a healthy program of exploration at the Valentine Lake project as we move forward. But, the focus now is getting through the regulatory bits to close the deal. An information circular goes out in December, and then we close the deal. Shareholder vote happens the middle of January of 2024. So that's where our focus is at the moment.
Well, Ryan, just to reiterate, let's maybe dive into the exploration side, because we got a lot of questions of, will you have to scale back the amount of exploration you're doing in Nicaragua and in Nevada? It sounds like you want to do exploration at all three projects, but will you have to reduce down what you have been exploring for and the pace of development to move some funds that you're bringing in over to the Valentine Lake project?
At this point in time, we haven't provided any guidance, but we wouldn't anticipate any changes to our rate at which we're doing exploration work. That's one of the advantages here and opportunities, really, when you look at it, when you take a step back, is that we're excited about the exploration potential in all of the jurisdictions. And fortunately, because of the strong cash flows and balance sheet, we are able to fund that exploration effort, which, again, that's the opportunity with us in Central America, because we've demonstrated the effectiveness of the hub and spoke operation. And really, the opportunity is still 1 million tons of surplus capacity there. So continue to invest in exploration, because we have been so successful with the drill bit. And then looking at Nevada as well, and then the opportunity as we transition to close the deal with Marathon Gold and Valentine Lake, excellent opportunity to advance exploration work there as we continue with the construction.
So it sounds like you're going to keep everything kind of up and running the way it is now. Do you need a major team build out to satisfy all this, because of the fact that you're going to be spending money in 3 different countries?
No, that's it's a good point. Our CEO is heading out to Newfoundland now. We're going to be spending a lot of time with the team over the next little while. And fortunately, that's the opportunity here, is that Darren's got a tremendous amount of experience. That's what he's done his whole career, is transitioning from construction to operations, overseeing production and operations, as he's done all around the world in very large scale operations. So he knows what is required to do that. And so, yeah, he's going to be spending some time understanding that. But no, I think we're in a good position here today, understanding the full complements and capabilities of a great team that's been put in place there. I mean, there will be a few things that are required, but no, I mean, at the end of the day, looks like it's a good complement. And yeah, we're really excited about the opportunity here, as given Darren's expertise and experience and all of what he's done in his career with Newmont.
Well, Ryan, let's bring another component of this transaction into the mix here, and that is on the 14th of November, Calibre and Marathon also announced the $40 million financing going to Marathon, where Calibre picked up 66,666,667 common shares. It's fun just to say that, Ryan, at a price of 60 cents. So that gives you a good equity stake in Marathon, I believe 14.2% stake now. If another party was to come into the equation and do a counter bid, you would have that equity stake, and you also have a break fee built into the deal. Maybe speak to that, but then also, where is this $40 million going? What was the purpose of it?
Yeah, I mean, that was a compliment to the Marathon Group, is that we participated and did that placement because we wanted to make sure that the continuation of the project goes on smoothly, but also we saw an opportunity there to own 14% of the equity, and that worked well for both sides. So it was, I think, a compliment to the whole deal.
So as you move through this build, then you're gonna, it sounds like, fund it with some of the money that Marathon had. You just invested in Marathon as well, so there's even more cash there. They also have a term loan facility, but as you said, you're generating cash flow from operations. Any clarity you can give us in terms of the debt component that you're going to use for this build?
Yeah, I mean, right now there's, I think it's $175 million with Sprott Lending, and that facility will be used for the project. You know, again, with their cash, with the operating cash flow that we have in that facility, it's fully funding the Valentine Lake project.
Ryan, just to follow up on a point we made earlier on the jurisdiction, what would you say to Marathon shareholders that wanted to have a focus in Canada, or at least North America, but with the merger of the company, they would be exposed to Central America now, as well as Nevada. Nevada is obviously a great jurisdiction, but there's people that are worried about Nicaragua that may be Marathon shareholders. What would you say to some of them if they're listening to this interview?
Well, I would say, you know, when you look at Marathon by itself, you know, there was this funding gap, and there was going to be either some form of stream or additional royalty or additional different financing packages that the team were looking at. And by looking at this combination, we've got multiple opportunities to re-rate on the back of the close in a pro forma company. One is fulfilling that funding gap. By doing this transaction, we fulfill that funding gap. In there alone, you should see a re-rating opportunity. Two, your pro forma company, yes, not 100%, but it will be at 60% of the NAV of the overall combined entity will be coming out of North America. So that's going to uplift everyone because of that jurisdictional diversification. And three, you're not only producing 200,000 ounces a year, you're producing upwards of 500,000 ounces a year based on the analyst numbers, and therefore getting a tier re-rating going into a mid-tier category, as I talked about a little earlier. But in terms of Central America, I mean, you step back and look at what Calibre has been able to do over the last 4 years. We've demonstrated a strong mining legislation by the fact that we've permitted 3 satellite open pits. We've gone from permit to plant in 18 months, so a very supportive mining environment. They've got a strong mining legislation. We've demonstrated transparency with all of the communities in which we operate in, i.e., working through the permitting process and hiring locally. So yeah, no, it's been a fantastic place for us to do business. We've brought many investors and analysts down to site who are very complimentary after being there and recognizing that the perception versus the reality is significantly different. Very good infrastructure in country. Good electrical power grids have been built out there, so it's a strong place from an infrastructure perspective. And yeah, no, Calibre's been growing at a rate of about 20% year over year in terms of its production. And so we've been able to do very well operating in that jurisdiction. We see it as a good place to continue to invest and to continue to grow. So that's evident based on our track record, but also our largest shareholder, B2 Gold, who operated there for 10 years. And we're quite successful at doing that and building a very robust, large, diversified, global senior gold producer by starting out in Nicaragua. So we think it's a great place to do business.
So Ryan, I want to follow up on one thing you said when it comes to the first gold pour for this Valentine Gold Project. Marathon was anticipating kind of Q1 of 2025. You said the first half of 2025, just a little nuance there, but could this be delayed at all because of the fact that it's being built now, but as the merger happens, there is a lot of kind of background stuff that the companies need to do just to get this across the line?
Yeah, no, a good question there, Corey. And we're following that schedule that's in place right now. I mean, we will come out upon close with updates, but as of right now, we're following the marathon schedule.
All right, Ryan, thank you very much for this update. It does provide a lot more color to this transaction. And thank you, everybody, for sending in your questions. And again, we had a lot of analysts and newsletter writers comment on it, pretty much all of which think that this is a very good deal for Calibre and it helps with the diversification and growth coming in 2025 in terms of the production profile. So as this deal moves along and as we undoubtedly get more news out of Calibre on the production front and exploration front, Ryan will keep touching base with you. So thank you very much for addressing these questions for us today.
Thanks, everybody. Yeah, look forward to the future. Very exciting times.